Goldman Sachs has updated its oil market forecast, projecting a larger surplus in 2026. The bank attributes this to increased supply from the Americas, which is expected to offset production cuts in Russia and a modest rise in global demand. While maintaining its 2025 price forecast, Goldman Sachs projects 2026 averages for Brent and WT1 crude at $56 and $52 a barrel, respectively, noting that risks are skewed to the upside. The bank suggested that OPEC's recent decision to unwind production of the 1.65 million barrels per day cuts is a response to low commercial oil stocks. Although Goldman Sachs now forecasts a higher 2026 surplus, it anticipates a slow build in oil stocks starting in late 2025. OPEC Plus has agreed to further rise oil production from October as its leader Saudi Arabia pushes to regain market share while slowing the pace of increases compared with previous months due to an anticipated weakening of global demand. OPEC Plus will increase oil production by 137,000 barrels per day BPD starting in October, a significant slowdown from the monthly increases of about 555,000 ppd for September and August and 411,000 ppd in July and June. This decision reflects an effort by Saudi Arabia to regain market share amid an expected decline in global demand. This move also marks the beginning of the early unwinding of a second round of production cuts following the full reversal of a prior 2.5 million barrels per day reduction. Italy and the United States have vowed to deepen energy ties, including through increased exports to Italy of liquefied natural gas, LNG, as Europe continues to seek alternatives to Russian energy supplies. Italian Energy Minister Picciotto Farint and U.S. Interior Secretary, after talks in Rome, pledged to foster a steady and secure flow of American LNG to Europe without committing to exact figures or time frames. They said they would aim to encourage investments in LNG import and regasification infrastructure in Italy, as well as export infrastructure in the United States to ensure efficient and resilient supply chains. Oil prices rose on Monday, recovering some of last week's losses after producer group OPEC Plus opted for a modest output hike and investors priced in the possibility of more sanctions on Russian crude. Brent crude climbed 0.87% to $66.07 a barrel, while U.S. West Texas Intermediate crude rose 0.74% to $62.33 a barrel. Both benchmarks had risen more than $1 earlier in Monday's session. Prices fell more than 2% on Friday as a weak U.S. jobs report dimmed the outlook for energy demand. They lost more than 3% last week. Gold surged past the $3,600 announced level for the first time on Monday, hitting a fresh record high as soft U.S. labor data reinforced expectations the Federal Reserve will cut interest rates next week. Spot gold rose 1.3% to $3,631.66 per ounce. Bullion hit a record high of $3,636.69. U.S. gold futures for December delivery were up 0.5% to $3,670.80.